Hey, welcome to the game of money. I'm Oren Klaff. I'm here with Kevin Soltani. Thank you very much for coming. We're going to talk today about everybody's favorite subject, blockchain, crypto. So just for awareness, I manage money for about 300 families. We put about $30 million into a single asset over the last year. That thing has about a $250 billion valuation. And so, no stranger to deploying capital into assets. Done that whole career. I've got a software company in my portfolio, maybe $90, $100 million value. We started it at 25 million. And so that's kind of the range that I live in, is taking things, they don't go from zero to, 20 billion in 9 weeks. And so I think a lot of people in the domain that I'm in get nervous or scared or, are dip their toes into crypto. Now, not long ago, sitting in the chair that you're in, under that light, on that microphone, was Brock Pierce.
Yeah.
And Brock Pierce goes, I'm buying Bitcoin like mad. Everything I can buy. I'm just, I'm buying it. And I said, Brock, what are you talking about?
Relax.
Like, let's talk about something that, we can understand. And now, a couple years later, I'm sitting here with Kevin Soltani, who's going, I'm buying Bitcoin, everything that moves, getting my hands on all of it, blockchain, right? And I'm going, Kevin, what are you talking about? So history repeats itself. I'm ready to miss out on my next $1 billion.
No.
So if I just, done exactly what Brock told me to do, then I would have, I'd be living a great life in Southern California, have a nice family, have a wonderful place, a studio, a bunch of toys. So life would be great. But instead, all I'm doing is living in Southern California,
with
near the beach, with a studio, beautiful family, by the beach, with a bunch of toys. So you can see it's worked out. Not following Brock's advice has really, been rough on me. But I think in the world that we're in, there are, in terms of like investing in growth companies, there's like real input. It's black box investing, but what's inside the black box. So you shoot a marble inside the black box, right? And the black box is interest rate, the economy, the trajectory of the trajectory of the administration, what's happening with headwinds and tailwinds in an industry. But there's some, and so you shoot the marbles in, and then eventually you get to like figure out where the like restraining walls are in the black box, because you see where the marbles shoot out. And then eventually you could sort of build your vision of what's inside the black box and then build a company on data. And then you get into the blockchain and Bitcoin and these kinds of things, and you shoot a marble in and like it doesn't come out, right? You shoot another marble in and like 50 marbles come out. You shoot another marble in and it shoots right back at you and hits you in the eye. Like it doesn't do the same thing twice in a row ever.
Right.
So it takes guys like you, who have the fortitude and the some kind of insider knowledge. You go, no, that it's the risk and the rules are more understandable than pure randomness. Because I think it's randomness. If those of us on this side who weren't, running straight into, blockchain and Bitcoin and crypto and are still restrained, it's because we go, there's too much volatility and randomness in the rule sets. They're too hard to understand.
Right.
And you go, they're not hard to understand at all. They just move around all the time. And so what gives you the confidence, the understanding, the willingness to be in a market that those of us on this side of it think is so volatile?
I'll start with the cliche technology versus currency. You have blockchain, which is the technology layer.
Yeah.
And you have crypto, which is the currency layer.
Yeah.
These are obviously correlated for obvious reason. One comes from the other. But you told me you manage money, currency. You manage startups and companies, software, technology.
Yeah.
Both have an equal part of your portfolio. Both can outperform each other on any given time. I'd argue actually the technology side has a 10x, 20x multiple in Silicon Valley at any given day. So that might outperform your performance on the currency side. Same goes with blockchain, and same goes with cryptocurrency. Another cliche example to start with, but we got to give the man credit or not. BlackRock's Larry Fink. They run the world, some people say, and yet this man comes out and says tokenization and digital assets will be the largest part of not only their portfolio, but the world's financial asset portfolios. Every stock, bond, commodity, securities will be tokenized within the next 10 years. This is someone who doesn't just say random things. Yes, he wants to get ahead of the curve and he wants to be a part of it, but that's combining the technology and the currency side. He's going to be able to manage the money, manage the technology, because it's just like the internet and blockchain, you cannot turn it off. Bitcoin needs a 51% attack. You guys can research what that means, and that's pretty much attacking 51% of the computers in the world, which will take, I believe, hundreds of thousands of years at current rates. Quantum's coming, so that's a whole nother touchy subject for us in our industry.
Yeah.
But when you said like it's unpredictable, 100% true, because we have a president now with a tweet, it can manipulate all markets, let alone the crypto markets. Regulations are fast coming. We have different countries, different continents regulating it better than others. And here we are in the United States, which everyone gives us crap for not being ahead of the curve or whatever. Actually, we're the most ahead of the curve. This is a very unpopular opinion, and a lot of people are going to disagree with me saying that, but everyone follows us. So why is the Bitcoin ETF the most successful product, one of the most successful products in BlackRock's history? The inflows are astronomical. And yet now you have EU, Asia following trend. So they wanted to see what Big Brother did. They wanted to see if it worked out, and it quite worked out. And so now you're seeing that go to the other continents. And it's not ironic that that happens. The ECB is a mess. Europe is cooked, as we say in our industry. You know, as far as financial systems, the outflow of millionaires and money. I live in Dubai part-time. I've been there for about 9 years. And they are the mecca of the world for cryptocurrency and regulations. So now we're talking about something you like to touch, which are tangible, real-backed, formidable assets that aren't going to disappear tomorrow, be sued and taken to zero.
Yeah.
And I think that's creating trust in the system. And a lot of trust still needs to be taken.
So let's go all the other way to the meme coins,
Yeah.
right?
Yeah.
Which pop up, disappear, and then they pop up again, and then meme coins have sort of become memes of their own. And I think that for people listening, I think it's helpful to understand why a 13-year-old in Topeka can issue a coin, then it sells a little bit, they either make some money or don't, and then the whole thing disappears, and then people don't do it. And why is losing money and high volatility becoming the norm, at the bottom, and then what's at the top in terms of the norms. And I think most of the people listening to this will have missed out largely on the crypto run-up.
Sure.
And so what I'm trying to do is get some bookends and then paint where's an insertion point where if I haven't been doing much of this or none of it, that I can insert myself that doesn't feel like I missed the whole thing. Why bother?
Yeah.
Flipping real estate. Or I don't understand it, and I'm getting in over my skis. Like, where's an insertion point that feels logical for somebody who's watched all this develop but coming in now?
Let's start with the meme coins.
Yeah.
Because that's the hottest topic of post-COVID and post-COVID. These three beautiful letters, or I hate them, were NFTs, non-fungible tokens. Yeah. The third word in that, tokens, is where I want to get to.
Yeah.
But okay, let's go back to these JPEGs with meme coins and all these assets. They're also, ironically, the most liquid asset ever created. Literally within seconds, you could run up to $1 billion and take out $1 billion. There's no other financial asset in the world where you can snap your fingers and run 9 to 10 figures.
Right.
We saw what happened with Trump coin, Melania coin. That's quite literally within seconds, minutes, because of liquidity.
Yeah.
And also, if you look at the volume and the facts, who runs liquidity in the crypto market? No one likes to talk about this, but China. China has the most dormant Bitcoin wallets that are untouched because they understand hodl, as we say, holding, and they understand liquid markets, meme coins. And so we look at our 16, 18-year-olds, like you said, creating JPEGs and meme coins and running them up. That's like 0.1011%, very, very small percent. The 99.9% are going to lose their ass because we call it the last one holding the bag.
Right. That's my point, is like everybody who, they don't have context on a timeline.
Sure.
So everybody coming in today feels like, it's the same, as I talk about stocks, when a bank, BlackRock, Bank of America, JP Morgan, Fidelity, when somebody's getting out of a stock, and letting you in. When they're letting you in, they're out. So you can hold the bag because you have the least amount of information, least amount of access, the least ability to underwrite, the least, fundamental understanding. And when something looks good to you, they are the Raiders of the Lost Ark, right? They're grabbing the bank is grabbing the golden idol, putting it on a sandbag, and that's what you get to own is a sandbag.
But as we know, when you hear a CEO selling their stock, it already happened 6 months ago.
Yeah.
Maybe you saw that incremental sale of that last 10%, but you missed out on the 90% he's been slowly getting rid of through pseudo companies or his uncle or his dog's grandpa's something like, it's third removed. So same is in crypto for the big boys, but with meme coins, it's some kid in mom's basement. That he's there 24 hours a day on these forums. He doesn't sleep because he can, and he's active on the forum posts, and so he's there. So it's FIFO, right? First in, first out.
Yeah.
And it's no different from crypto, except for the economies of scale have shifted from a Series 763 degree granted, Harvard-educated gentleman from MIT to mom's basement, 16 years old, that went to YouTube University.
Yeah.
And so, but the banks are asleep at the wheel on this one. They don't know what to do here. The Robin Hoods are not asleep at the wheel, but that's a whole nother touchy subject because
just for focus, so you have kids creating meme coins, and then they're not just creating it; it doesn't have any inherent value. The value in it is they're outselling it. They're marketing it, giving visibility on it. People are buying it, and it's a job,
pump and dump.
Yeah, so they're in essence. I mean, they could be using that energy to sell T-shirts, protein powder, an Amazon drop ship, but they're just, making the money, maybe more or less money promoting, this coin. And then it is just a sort of form of entertainment, but you're saying that is an absolute fraction of the market. So then what's at the top of the market?
Yeah.
So where are the big trades being made?
For context too, no one on this side, we call ourselves the suits of blockchain. And that's very cliche, very boomer driven mentality because no one wants to sit at the BlackRock table and talk with them. We like that.
Yeah.
Guess what? We missed out on trillions of dollars because we're not trading memes. So who's the winner here, right?
Yeah.
The kid in a backwards hat in mom's basement.
Yeah, but we don't have enough time.
I don't.
Right? And we can't aggregate the time.
I got a bit of a reputation I can't do these things.
Yeah.
If Kevin touches meme coins, Kevin's done so.
Yeah.
Now the game has really changed, right? You got Shiba and Doge, which have larger market caps than half of Silicon Valley. So that's a whole nother thing. But you asked about what is at the top of the food chain. It's like the ETF. These products that are coming out, these tokenized assets. Soon it'll be tokenized real world assets. That's another 3-letter word that's come out, RWAs. And so at the top of the food chain, you go back to BlackRock. It's not ironic that they created the first Bitcoin ETFs. There was 10 other companies at that time, but theirs was the lowest fee with the highest run rate to get their clients on board. Because the client calls BlackRock and says, hey, what's new?
Right.
They don't really explain what's new. They just say, I need to put 100 into that, 200 into that. They say, great. That's about as far as the conversation goes. Just so happened to flow into the Bitcoin ETF. The best performing asset of all time, ironically. For about, I don't want to say this wrong, 84, 94 days, 104 days, something, it was $1 billion a day. It was these rapid numbers coming in. There's just nothing like it.
Yeah.
And it's liquid. And it hit 100,000. And it hit 113,000. As we're sitting here today, it's back up to 104, 105.
Yeah.
So Trump made a deal with UK the other day for the tariffs. Yeah. Boom. Trump makes a deal with China, it'll capitulate because it's against the whole thing. So at the top level markets, it's no different from the stock market. It's no different from a tweet from Trump saying now is a good time to buy, and it goes for crypto. It goes for BlackRock's other assets, the QQQ or S&P. And just yesterday, it was announced that Coinbase, our baby in America, is going to be listed on the S&P. So more legitimacy.
Okay. So, and then where do you grind your axe in this market? Just because I want to get back to insertion point. Like, where can we jump in and what can we do practically? But we can't understand until we understand like where your, positioning is.
Yeah.
So you say you're in Dubai. I always tell people, I think I've said on this podcast, money flows between America and Dubai. Because I talk to lots of entrepreneurs and they're like, yeah, I'm talking to someone in Dubai. Money flows between, they might invest. I'm talking to the Dubai sovereign account. I'm talking to a investor in Dubai. I go, Jim, Joe, Susan, Harry, Tom. Money flows between America and Dubai one way, from America to Dubai. not this way. Stop talking to mystery investors in Dubai. Not going to happen. So that's, my perspective. But, I assume Dubai is just an ecosystem. So like Silicon Valley, if you're going to do a tech deal, it's in Silicon Valley. Trying to do a tech deal in Kansas,
Correct.
you're cooked. Movies in Hollywood, oil in Texas, financial instruments on Wall Street,
Sure.
Scottish salmon, Atlantic Scottish salmon in Scotland. There's ecosystems that produce certain things. And I'm assuming, Dubai has just, created an area with a lot of resources, a lot of people, a lot of technology, and it's just an ecosystem. The same way that, I'm trying to think of China has an ecosystem for cheap goods.
Yep.
Pakistan has an ecosystem that's amazing for textiles. India does low-cost manufacturing of, high quality, home goods, using European technology. So everybody sort of gets we buy our equipment from Northern Italy. Northern Italy is just known for manufacturing of industrial goods. So Ferrari is there, Ducati is there, Bizzarini is there, Bugatti is there, MV Agusta is there, Aprilia is there. So all the Lamborghini is there. So the automotive, motorcycle, and speed manufacturing is in Northern Italy because it's an ecosystem.
Right.
So I'm just assuming in Dubai, there's nothing magic there. It's not like an oversupply of money. They just over time have built an ecosystem there for the trading of blockchain assets.
Crypto regulations, something no one else wanted to touch. China banned it, America banned it, taxed it, this and that. I moved out of, not full time, but I moved out of America in 2016 to go to Dubai for that only reason.
Yeah.
It wasn't about tax. I was much younger. I was not making enough money to care about tax back then. It was just that they had announced that crypto's dead. We're going to come after you, all the miners. I was a crypto miner in 2013. So, early days, I've seen it all. I've been hacked by Mt. Gox. I've been hacked by Cryptsy. Everything's run down. I've lost more money than made money. So I said, screw this.
Amazing.
I'm out of here.
Yeah.
And so Dubai came up with this Dubai Initiative 2020. It's right there. All government documents will go on the blockchain. That's been sorted, signed, and sealed. Just for saying that takes a lot of cojones to do that. And it's the hub of the world. Within a 4-hour flight, you get to 3 billion people. So what does that mean? Indians, a lot of Indians work there. Remittance. A lot of Filipinos work there. Remittance. Remittance at Western Union is still 129-year-old technology. It takes 1 week to send $100 at 7% rate. What kind of future do we live in?
So they build an ecosystem where you could off-gas
with
money with regulations, and you had some. So they build a better black box. You shoot a marble in, and it comes out the same side every single time, and you're like, okay, it's predictable. I understand the rules of the game.
Yeah.
I understand game theory here. I can on gas, I can off gas, or whatever you call it. I can get money in, I can get money out.
Correct.
I understand what my fees are, and so they built that whole, and that attracted people, attracted technology, attracted money, and then it just became like Silicon Valley or Manhattan or Dallas. It became an ecosystem for doing this and attracted smart people like you. And then the people were there, the money were there, the systems were there, built on itself, and that's the place where this stuff happens. So then what happens?
So, you can't do anything. I call it the big kids table. You can't do anything unless it's regulated, right? When we wanted to sell securities, I come from Wall Street. Like when you want to sell securities, you have to take all these tests, and you have to be a securities licensed broker. Right. These are highly sophisticated tests. We don't have that in crypto. There's no test you have to take to start selling crypto or memes or even blockchain technologies or nothing. You quite literally go to YouTube University or you learn it from your mentor like I did, and the rest is history. But for the first time, Dubai and Abu Dhabi being the big brother created, so ADGM is part of the Abu Dhabi Global Markets, which is a central bank.
Yeah.
That's the initiative. VARA is Virtual Assets Regulatory Authority. That's the Dubai license that you need, where all the biggest crypto exchanges have this license. If you don't have this, you're a scam. You're going to go down. They're going to come after you.
Because Dubai also has a very robust gold trading, right?
One of the biggest in the world.
So even if you get gold in Sierra Leone, or Namibia or Belgian West Congo, so if you're in Switzerland or you're in Germany and you run a mining operation in Belgian West Congo, then you take that, then that gold is then uh, I believe, taken to Dubai, refined there, and then it can get sort of on the system, logged, and become a standard of exchange, and then it can be sold everywhere else. As much, you don't take it to Oklahoma, right? Because there's no refinement, and they can't. There's no sort of source that documents the gold, and then can put in the system on the ledger. So there's the infrastructure and the regulation that once it gets on the ledger, there's some confidence that it came through enough onboarding that the ledgering of it has some enough record keeping to be legitimate.
The ledger, the distributed ledger, is on-chain data. This is what makes blockchain so powerful. This is what makes it the future, and you can't turn it off, because the on-chain data, which is the distributed ledger technology, this allows for every transaction, every person, everything. No more scams, no more hacks, no more copies of my portfolio, no more 3 credit cards out there being used in 3 different countries, because it's on-chain. You can't change on-chain data. It's a smart contract solution that takes care of all of what we just said. So the gold, going back to your analogy, we have the gold souk in Daira, which is Dubai. They're pumping billions and billions of dollars a day. It's a very liquid market for gold. Now, the blockchain side is also what
just so people understand, like you're not trading the gold bars, you're trading ledger.
Correct.
Right? And so it's very critical how something gets on ledger as gold, because you're trading it without physical thing on the gold. So Dubai has these, the Bank of Dubai or whatever has these very credible on ledgering for gold resources that once it's on their ledger, you have the comfort to trade it. And so the same thing here is once something gets on ledger, because it came through this system of checks and balances or whatever that's there that isn't in other places, you have much more confidence that it's tradable.
So we also have many licensing companies. DMCC is the commodities licensing company. They do all of the commodities: gold, diamonds, coffee, everything. They've also added the crypto center and AI center, because it's a commodity now. And so they're very highly regulated. Shout out, Ahmed bin Salayem. He's not only a person that's an innovator, but he comes from a long line of family innovators, and they understood that technology is the forefront. And so gold is, hundreds of years old technology. You take one, you barter it, you trade it. Nothing's changed technically on the Daira streets of the gold souk. But everything's changed as far as the ledger, and it's becoming digital. Now, it's become the hub for digital technology, and then digital assets is very sophisticated. Blockchain and crypto, this stuff scares the old, it's going all digital, whether we like it or not. And so when you're looking at trading, commodities, things like that, enter blockchain, on-chain data, immutable, anonymous.
It's fair to say if you bought it, then you bought it. You could sell it and you bought it. Like there's not, concern that you bought something. You see it around a lot of motorcycles. If you buy a motorcycle on eBay and it shows up, you have no idea what you bought. It's definitely not going to be better than you thought it was.
How about if they say it was a 1 of 1, and then that day you drive home and there's a 2 of 1 or a 1 of 2? It's like, whoa. Didn't you sell me a 1 of 1? Right? I thought this was a 1 of 1. So who's there to say signatures? Michael Jackson, Michael Jordan signatures. Right. These guys are passed away now, and they're so good with deep fakes. How do we really, really believe?
Technically, Michael Jordan isn't passed away yet.
No. I was more Michael Jackson, because that was the last one I bought personally. And I'm a big fan of collectibles. But then NFTs came in. Because you could stamp it on chain and say, this is an actual 1 of 1. This is beautiful. It truly is beautiful. And then the currency behind it is just an added value. But all of this allows it to be fractionalized as well. You can fractionalize your gold pile, right? This is where tokenization comes in, where Larry Fink was saying that in 10 years, every stock, bond, commodity, and securities will be tokenized.
So do you know Rally Road? So Rally Road tokenizes or fractionalizes assets that feel like are automotive, art, or memorabilia pieces of history.
Amazing.
So for example, if you're sitting around here and you go, I always wanted to own a Ford GT40, original. There's, 7 of them, 5 have crashed. There's 2 left, whatever the case is. They're worth $13 million each. If I owned it, I can't afford it. I have nowhere to put it. But I would love to own a piece of it. So I put, $25,000 or $100,000 and I own a piece of a, $500,000 million, $10 million, asset piece of artwork. So is that what you mean by tokenization?
Exactly.
Is I own, so basically I have a stock certificate that is digital, that is, verified, on the blockchain, that I own. Then nobody can take it away from me. Nobody can prove me different. They can't oversell it. And it's both regulated and visible to everybody who owns what pieces of that piece of artwork or that car at the same time. So that's what you mean by tokenization.
Tokenization and governance. If everybody who owns the token gets together and says, you know what, we're going to take a vote to sell the car now because we want our returns or we're just over it or whatever, you should be able to have a liquid market. That tokenization gives illiquid markets, illiquid assets, liquid market opportunities.
Okay, but if I'm sitting out here, in Jeff's chair and I go, okay, why do I need you smart dummies to figure all this out? It's just called a stock, right? So I got a company.
Sure.
I own stock of the company. It's not on any blockchain. It's just on the, the securities exchange. I can buy it or sell it. It's liquid, and it's, essentially a company's been tokenized.
Right.
Why do we need a system to do that?
Fractionalization.
Yeah.
That's probably the holy grail of tokenization. And that's where Larry Fink is talking about every securities and stock wants to be tokenized, because he can fractionally break it down to millions to the part, make more fees, customize strategies for his clients based on that.
But give me an example, because stocks are already the fractionalization.
Yeah.
So we have a company, we put $30 million into it. Ideally next year be doing $50, $60 million in revenue. That year or the next year we'll take it public, and you'll be able to buy, a share of it for $5 on NASDAQ. And, assuming there's a taker, you can sell it. Assuming there's a seller,
right,
you can buy more of it. And so how would you take that stock and do something additional with it?
So stocks are probably secondary, but the tokenization of what he's talking about, securities or treasuries and things that tend not to have access to the normal man.
Yeah.
You need to be a retail investor. You need to be a certain level. You need to make this much money to have your hand in certain pots.
Right.
That's being democratized completely.
But I think, so we would argue that's bad, right? Because the reason those rules are in place is so little old ladies in Kansas don't get sold pieces of something that they don't understand.
True.
Right? And so that's why the rules are there, that if you are selling to little old ladies in Kansas, you have a license and you can be held accountable if you don't follow the rules. And really a certain kind of buyer should really only buy certain kinds of an asset because they can understand it. So the rules are in place.
I don't disagree with you, but BlackRock does.
Yeah.
So if they can sell more of the same thing, they will, because they get more fees, they fractionalize it, and more people have access to it. They cut more fees.
Yeah.
And this isn't just a BlackRock bashing, because I'm actually very happy that he would say something like that.
Yeah.
Because that's where the way of the technology. Very exciting. Now let's go to the holy grail of tokenization, which everyone talks about, no one can tackle, going back to regulations, and that's real estate.
Yeah.
Real estate. Our generation and the generations coming, it's a dream for them to have what you have right now in your home. Forget about it. So I live in Orange County. You live, I think, right down the street here. So these are some of the most expensive homes in the world.
Right.
Per square foot. Sorry, it's just fact. Dubai, I'm also screwed. I live there too. It's not cheap. But in the future, for our sons to get and talk and say, hey, you're going to tell me, so let's go back to me and you. You're going to say, hey, Kevin, just bought that property. I had to put 50% down. Actually, I paid it cash. Okay, great. Hey, good job, Oren. That's your third property. That's your fourth property. Your son is going to say the same thing about 5 or 10%. He's going to say, hey, buddy, I just bought a 5% in Newport Beach, and I traded 3% of Tesla stock, and I bought 1% of the Moonlander going up. Like, it's going to be tokenized assets. So right on his own TD Ameritrade or Schwab account, he can trade 5% of a home because it's liquid. He can trade some Tesla stock. The Moonlander, quite literally anything, space tech. That's beautiful. And that's amazing, because he's never going to be able to buy 100% of a home.
So to make that clear, So we have a home and whatever in Sanitas, and we give him 5% of it that goes in his account,
Yep.
and then he can get in there and manage it, and he can go, okay, I'm going to take 1%, and I'm going to, there's something that I want to invest in,
Correct.
so he's going to take the some fraction of the fraction, buy something else. Remind me the guy on Craigslist, right? The guy on Craigslist who's like, hey, I'm gonna keep trading something up to see if I can buy a house.
Sure.
So he takes like an old
He's
sock.
the definition of
Right.
fractionalization.
Yeah, he takes an old sock and he trades it for $1.
Ferrari now.
Right.
Next thing it's a Ferrari.
Yeah. Right. He for people who know the story.
Yeah. Trading up.
he traded something. What did he start with?
I think it was like a paperclip, to be honest.
Paperclip.
I think it was a
started with
paperclip,
He
right?
ended up buying a Ferrari.
Yeah.
Right.
I think something like that. But,
Yeah.
in the sophisticated analogy of that,
Yeah.
it's your son taking his 5% that you put in his trust.
Yeah.
And he's going to take 1% because he wants to invest in the new hot startup.
Yeah.
It doesn't hurt your 95%.
Right.
Or now 99%, or,
Right.
94%.
Yeah.
Because there's, in the smart contract, it's been written that ownership is with the 51%. Whatever you want to bake into the smart contract.
So great. So we went over this very quickly. If I give him 5%, the value of our house is $6 million.
Yeah.
I give him 5% in his account, then he may go, okay, this is the next Tesla. I can see it clear as day. I go, it's clear as mud to me. And then he can go, okay, but I'm going to
doing it anyway.
Then he's going to take a little piece of it. That's going to go up in value. He can go, okay, I'm gonna take half my value in this up value. I'm gonna take another % of the house. I'm gonna take this value I built. I'm gonna go buy I want to make something on a specialized 3D printer, right? I'm gonna take some of that and I'm gonna buy some time, in the 3D printer. I'm gonna make this part, and just cascades where he's just sort of trading little
Bitcoin.
little pieces of access, material and assets, and buying and selling until he can aggregate enough buying power and focus to fully own something that he wants to use.
How about if he doesn't care to buy 100% of a home?
Yeah.
That's what I'm believing is going to come with this next generation. I don't think they actually care to own a home the way our generation was sold this idea.
Yeah.
And maybe they want to live in different countries. Maybe they want different homes, just like the old versions of timeshares.
Yeah.
So tokenization of real estate might be like a timeshare model where I own 5% of my Portugal home, 5% of my Dubai home, and 25% of my Newport Beach home because I want to really own that one in some ways, or 51% if I can afford it.
Yeah.
They might not care to own the 100%, whereas they want their money to be liquid. They want it to be fast moving and agile. Current markets don't allow them to do that.
Yeah.
And so that 5% of what you're saying makes a lot of sense for him because, yes, we're going to have robotics and these space tech and all these crazy things coming up, which they should be liquid enough to compete with Amazon, Google, and all those kids. Otherwise we're screwed because the rich get richer, the poor get poorer, and it's no different in any market. So allowing your son to do that, in my opinion, is very powerful. And I would teach them when tokenization's a thing, and it's coming up very quickly, to do that, to not have all your eggs in one basket like our generation was taught. Buy a home, sit down, shut up, retire, die.
Yeah.
No, that's the times have changed. 8% mortgage rates right now out there on a $2 million home, in Orange County just 4 years ago was 1/3 the payment.
Yeah.
Now it's, just math. No one knows math anymore though, so tokenization is math at its finest. And guess what? Larry Fink and BlackRock, Blackstone, all these guys get it. And so I think it's a
we have to be
beautiful
careful.
piece
Like they get it, or they are, promoting it. In 1841 or whatever it is, the head of the patent office said everything that can be invented
has already been invented.
And then we were supposed to get flying cars, 20, 30, 40 years ago.
Yeah.
Still waiting for those.
Dubai, by the way, flying
yeah.
taxi in 2026. That's actually fact. They have flying terminals right now being built. Wild. So see, it's coming.
What flies it?
Good question. Autonomous,
Yes.
I'm guessing.
Yeah.
It has to be autonomous. I don't trust these guys.
Yeah.
I'm not going to trust if you've ever been in Dubai traffic recently, it's a mess out there. But that's just because their economy's doubled from 10 years ago, and it's going to double again by 2030.
Yeah.
So,
and what's driving their economy?
I mean, look,
Yeah.
All this crypto stuff, all this new assets, all the ideas that nowhere else wants.
Yeah.
More billionaires have left London than any time in history. And where are they going? Dubai. More millionaires are leaving America, but we're being spread out.
Yeah.
We're going to different states rather than different countries right now. So we're in California.
Yeah.
We know that story.
Yeah.
You know, I'm surprised you're still here.
Yeah. Well, so California, comes with a couple good features, that I like.
Same. I know.
Pacific
Same.
Ocean.
Same.
Weather. My friends are here. My house is here. So, all right, let's turn the corner into a jumping in point.
Yeah.
What can people are excited by this tokenization. They get a sense that, the blockchain is stable, robust. But the problem is all of this stuff has fractionalized from products. So you have the Ethereum and the Bitcoin, and then there's so many splinter, basically ETFs or trading of, what do you buy? What's a jumping in point? How much time would you have to allocate to it? How can somebody start playing this without undue, risk?
Again, two sides of the coin.
Yeah.
I don't want to, differentiate it, but at the upper echelon, you got to call your money manager. You got to call your financial advisor. And it's a crime that your financial advisor is not advising your portfolio to have Bitcoin right now.
Yeah, he's going to say, what are you talking about?
Yeah, but that is a crime because it is
Yeah.
the best performing asset of the last 15 years. It's not me. That's fact. So it's a crime for him or her.
So if
to
I call
not
him,
say
he's
that.
going to go, yeah, we don't touch that stuff. We don't want it on our
Call a
books.
new one.
Okay. So he's going to say no. So we're still, where's a jumping in point?
The jumping in point for everybody else, which not everybody has a money manager. DCA. Just like you look around the room and everybody told you, what should I invest in? I've never bought a stock.
Yeah.
Well, if you see a bunch of iPhones, do you think maybe Apple's a good buy?
Sure.
If you go to China, it's in Asia, 95% are Android users. Do you think Samsung's a good buy?
Yeah.
I think I see a lot of Teslas around. You think Tesla's a good buy? You don't have to be a rocket scientist.
Yeah.
And Bitcoin is in your face everywhere.
Yeah.
Right. I live and breathe this industry, not because of Bitcoin, but Bitcoin gave me everything. I believe in it.
Yeah.
I believe in it. And it's all fugazi at the end of the day because you got to have a buyer for what you're selling. But the ETF is not fugazi.
Yeah.
The technology is not fugazi. So the entry point is DCA. Do some dollar cost averaging of what you can. I always say if you're under 30 with no kids and married, you can go up to 25%. You got risk appetite. You'll be fine.
Yeah.
If you're over 30, you got kids and marriage, between 1 and 10%. That's very modest.
Yeah.
We spend 1 or 10% at lunch during every month.
Yeah.
We don't on an iPhone these days.
10% in Bitcoin.
In Bitcoin specifically.
Yeah.
If you have trading accounts, if you trade on the stock market, you can touch the ETFs.
Yeah.
You can start to touch other financial products that are the skin of the share, right? But we have a saying in crypto, if it ain't your keys, it ain't your coin, right? So if you don't own the keys, you don't own the coin. So ETF doesn't allow you to participate in the ownership of Bitcoin.
Yeah.
I truly believe that for your son, who's at that not lower level, but he's not participating yet, buy him the actual coin.
So just get into Coinbase.
just like gold.
Just get in my Coinbase account. Get him, a Bitcoin.
Whatever you can. Owning one, I think it's now up to 0.2 Bitcoin, but it used to be 0.1. You're a 1%er.
Yeah.
That's crazy. That's only $15,000.
Yeah.
You got to be able to put $15,000 for your son by the time he's 18.
Yeah.
We all should, or else we should move out of the state and do something else because there's other states that allow you to live cheaply, but you got to be able to invest in him or her. So, but for yourself, going back, DCA, do some dollar cost averaging of whatever you can, knowing that your dollar is dying every year.
Yeah.
Again, this isn't Kevin telling you, this isn't Oren telling you, these are facts. Over the last 100 years, we've lost 99% of the value of the dollar, right? We're just incrementally going down in value. With inflation, it hyperscales. Get some assets. I don't care what you do, but I'm always going to say Bitcoin. Bitcoin is the best performing asset of the last 15 years. It's in the hands of the biggest, richest people. Some of the richest billionaires in the world have asset allocations of 20%. The richest man in Mexico came out saying up to, we don't know if it's a lie or nothing, but he said 60, 70%. Well, now he's going to be one of the richest men ever in life, if that's true, if it hits an all-time high. And it just keeps proving everyone wrong. Yeah.
Yes.
It just keeps proving everyone wrong.
I was at the Daytona 500. I ran a car in the Daytona 500.
Awesome.
They had the drivers meeting. The drivers meeting is really like this big, 100-person celebrity mix-up. And all these celebrities, everybody wanted to talk to the celebrity, and Carlos Slim was talking, sitting there by himself. Nobody was talking to him, right? Because everybody was like, oh, there's Shania Twain, and there's, Gazonsky, whoever, and football players, and everybody was like going to talk to their celebrities. I'm like, nobody's talking to Carlos Slim. So I'm going to talk to him.
No one knows how that guy got rich either. He owns 80% of the SIM cards in Mexico. Technology driven, right? So anyway, that's a whole other story, telco. But how to get involved is to get involved.
Yeah.
That's how. Don't sit on your ass waiting for someone or a money manager, or I can't afford it. You can buy $1. And it sounds funny and it sounds stupid, but take one less lunch a week. So
just get into Coinbase, and is that where you would go, Coinbase?
That's it for Americans. Just start Robinhood, Cash App, Venmo, PayPal. All of them offer crypto on-ramping now.
Oh, I didn't know that.
As soon as
where's the lowest fees?
I think, good question, but I think they're all pretty crappy.
Yeah.
Let's be just very honest about that. They're all pretty crappy.
Yeah. Well, where do you get yours?
I use them all.
Yeah.
In America, I literally use them all. I was just going to use an example. If we go to lunch right now and you say, hey, I'm going to Venmo you.
Yeah.
I'm putting that immediately into Ethereum or Bitcoin.
Oh, wow. Yeah.
Literally, because I can.
Yeah.
Why would I let it sit in dollar?
Yeah.
And I don't really need the $20 right now, so I'll let it sit in Ethereum or Bitcoin.
Yeah.
That's awesome. Cash App also allows you to automate it. So I even did it for my mom. I did it for my wife. I said, hey, what are you able to do every day or every month? I'm sorry, every week. Month is too late.
Yeah.
I said $1, $5. So we automated a $5 to $20 transaction every day. And then every first Sunday of the month, $250.
Wow.
And that's automated.
That's awesome.
They can do that. My mom worked hard enough in her life, and my wife works hard that she can do that. And it's smart. They don't invest in anything else.
Yeah.
They don't have stock accounts. They don't have anything.
Yeah.
So why not do that? Mutual funds are a thing of the past. No Gen Z is going to touch anything of that type of product. Roths, IRAs, 401ks, all of those are going bust because no one's going to putting money in that. But digital assets, unfortunately, memes are the hot topic right now.
Yeah.
But once it gets more sophisticated and they become maybe my age rather than 16, they're going to start thinking a little smarter, wiser. So Cash App, Robinhood, Venmo, PayPal, these are just low-level apps. Crypto.com.
Yeah.
Crypto.com just made a deal to become the payment provider of the entire UAE. An American company they bought my beloved Staples Center.
Yeah.
Now is in the UAE. So now we're cross-pollinating these assets. So
amazing.
Just start.
So then let's turn the corner here. What is your business? So where do you grind your axe in the middle of all this?
I love the idea of the suit in the room. So I consult some of the largest companies. I work with the governments. I work with the middle managers to get involved. But I also put about 90% of my eggs in the technology side, blockchain. Cryptocurrency is not my business. Cryptocurrency is my investment.
Yeah.
That's what I do for me.
Yeah.
My own father, after 15 years, I've been in this game for 14 years, since 2011, and he's never bought a single dollar of Bitcoin. He's a Persian guy.
Yeah.
I don't blame him. I'm not mad at him. I wouldn't do it too if I was him. He made his money in real estate and foreign investments and things like that. But my mother, who's a little bit more aware of it, we got her started. My wife, who started dating me 8 years ago, got her started. So that's the investment side. But my business is on the technology side.
And what part of it?
I love the intersection of blockchain and AI now.
Yeah.
MedTech is amazing. And then the cool products of DeFi and DePIN. DePIN is decentralized physical infrastructures. Super nerdy. I'll let you guys research that. DeFi is decentralized finance. That's around the corner.
Yeah.
The banks are asleep at the wheel, not taking advantage of DeFi, because decentralized finance doesn't just mean decentralized. It means a new form of finance that gives you yield. CD accounts are done.
Yeah.
No one's going to park their money for a year for 3-4% when they can go to crypto and get 300%, 200%. Much less trustworthy, much less attentive to regulations. But
I want to.
It's coming. I don't advise that. No, I'm beeping with you. I'm beeping with you.
Yes.
Let's just go to the roulette table. Why don't we?
So and then what do your clients look like?
Like I said, a lot of government, a lot of I'd say under $100 million market cap companies that are either trying to work with the currency side or build their technology. And some of them don't have blockchain involved in them. A lot of them are working in Web 2, as we say, Web 1. And we all know Web 3 is blockchain, is the distributed ledger, is cryptocurrency, is tokenization of assets. So I would argue you could tokenize yourself. And that's a whole nother rabbit hole. You could tokenize your fund. You could tokenize your business. And that enters Web 2 to Web 3. And that allows you to enter a new environment. Gen Zs maybe speak that language more.
Because now when when my wife goes, "Are you listening to me?" I'm like, "Hey, I tokenized my tokenized."
Go talk to the NFT version of me.
Tokenized myself, right?
I wanted to like the cross section of AI and blockchain is two buzzwords. But did you know that AI agents, are hiring other AI agents? They're building their own products and using crypto as the money layer.
I worked on this. I worked on a company that was doing this almost 6 or 7 years ago. So what happens is we get into smart contracts, but this is really cool. So your your house cleaning robot goes, "Oh my God, there's a spill of something I don't clean." Right? Then it goes out and it goes in the neighborhood and it goes, "Hey, does anybody have a ability to clean up wine spill?" Right? And then somebody's thing goes, "Hey, I can clean wine spill." And they go, "Okay, I have a budget, of $20. How much you want to clean the wine spill?" And they go, "Okay, well, I'm not doing anything, right? I'll do it for $5." And oh, great! Yesterday it was $9. Yeah, but I'm not busy today. So then that robot comes over, and for $5 of the $20 that this robot can spend, it will clean up the wine spill. And then in clean up the wine spill, it goes, "Okay, now I have to get rid of this, wine before I go back. Who's willing to take, for 20 cents, I'll take your offload. Trash hasn't come yet today." And so all these different, things that want to do jobs will ask other things that have capacity, and then they'll trade among themselves with the budget they have. So absolutely clear. And but
the
exciting.
Agents are now governing their tokens. So they issue a token based on whatever they've created. And then you can fork tokens, which is a whole nother rabbit hole. And now it's out of our hands where we created the agent, hired other agents, created a product like an NFT, forked the token of the NFT into another wrapped token, another rabbit hole.
Yeah.
And they're governing both tokens to say you don't get access to it. And humans are left out of the whole thing. Collecting fees, trading, forking, swapping, DeFi, and making more money than we ever could within their own circles.
Hey, so listen, I mean, this
insane.
This is just coloring with crayons. Like my audience is sophisticated. Let's talk about some complicated stuff that they're really going to they're going to just fall asleep listening to this, boring stuff that is easy to do. Well, Kevin, this is awesome. I learned a lot here.
Appreciate it. Likewise.
You're really I think pulling back the curtain on how much is going on deep in the system. And the big takeaway here is, get your hands around something, get your kids in it, let them play with it, for sure. And take these little amounts, like you said. Somebody, I love this. Somebody, Venmos you for lunch, or I get all these refunds or whatever, and they just stick them in my Amazon, American Express points and everything like that. Take all that stuff, put it into tokens or Bitcoin, just through a basic gateway, and start to get in this game, because look how much is going on, and be totally unaware of it makes no sense.
Because it is a game. It is a game of money. And 1%, $1 on the financial side.
That's right.
And learning about the technology. No one said you got to learn about cryptography.
Yeah.
But if you're an investor, if you're dealing with these startups and investments, and they're not talking about blockchain and AI as these buzzwords, then you just don't like multiple.
Yeah.
Then you don't like to sell your company for 10x multiple, which has been done in Silicon Valley the whole time. So all I can say is do something.
Yeah.
Very cliche. I'm not the first one to say that. But if you don't have anything, it doesn't take much to get started.
You don't have any exposure to it. It's sort of like, and this is a terrible example, but when you build all this military technology, like, you need to get into a war, because you need to know if it works, right? You can't just go out on the battleground and go, there's a moving target moving slowly, and like, boom, shoot off a slow moving missile. Oh, we hit it, and there's no stress. And everybody's trained up on it, and there's lots of hierarchy and management around it. You need to get into full contact with the enemy to learn your systems, and so this is not something you're going to study, not something you're going to read about in the Wall Street Journal. You got to get into it. I'm assuming I'm assuming the governments of Switzerland, Philippines, and Sierra Leone are listening to this and like, how do I get a hold of Kevin? Right?
Switzerland's ahead of the game, but the funny thing is that we tend to get scared of what we don't know.
Yeah.
And I wasn't around for the advent of credit system where we went from fiat to credit.
Oh, you weren't born in 1348?
Well, the true credit, the what do they call it? The tulip crisis, which was the real first
1066 Battle of Hastings. You weren't there. I thought you'd look young,
well,
younger than he looks. Yeah.
What was it? 1971 gold standard. Blah blah. We all know that. I wasn't around to see that, but I can imagine it scared the shit out of people to say, wait. Now my note says I can't trade it in for what it says.
Yeah.
It's in God we trust now.
Yeah.
It's not in the gold that we have in Knox.
Yeah, when we got off the gold standard.
Right. So now we're doing that with digital assets.
Yeah.
And I get it. It's scary. It's unbeknownst to all of us that it came and swept up the world, but it's just numbers on a screen rather than on a paper. And that's okay.
Yeah.
We're going to move on to another system and paper fiat's going to go away. That's okay. Don't be so scared of technology. Technology is your friend, but if you don't use technology, technology will use you.
Yeah.
And you are the product if you don't know what the product is.
I definitely agree. A lot of people, the way I say it, a lot of people think they're at the table, but they're really on the menu.
Well said.
Yes.
Well said. Yeah, no different here.
Well, thank you for being here.
Thank you for having me. Thank you for having me.
But I think you're, in summary, it is a game of money. If you don't know the psychology of the game, then you don't understand how the money works. And there is psychology in these new platforms. So thank you for coming here and sharing.
Thank you for having me, Oren.
All right.
Yeah.
Appreciate it.
Take care.